What if I told you that the way most people compare real estate and stocks is completely wrong? Let me show you something. If you invest $100,000 in the stock market and the market goes up 10%, you make $10,000. Simple, clean, predictable. But now, take that same $100,000 and put it into real estate. You're not just buying a $100,000 property, you're controlling a $500,000 asset. Why? Because you're using leverage, debt. So now instead of earning returns on $100,000, you're earning returns on $500,000. Now watch this. If that $500,000 property goes up to $550,000, that's a $50,000 gain. On your original $100,000 investment, that's a 50% return. Sounds insane, right? That's exactly why people say real estate beats stocks. But here's the part almost nobody talks about. When you sell that property, you don't keep the full $50,000. You pay around 4% in commissions. On a $600,000 sale, that's about $24,000 gone. Just like that. Now your profit drops from $50,000 to around $26,000. Over 2 years, that's roughly 13% per year. And that's before maintenance, repairs, and hidden costs. So now let me ask you, is real estate really better than stocks? Or are we just looking at the numbers the wrong way? And more importantly, while some people are waiting for the perfect real estate deal, what opportunities are they missing in the market right now? This perspective was shared by Patrick Bet-David. Now here's where it gets even more interesting, because while real estate investors are making that argument, they're not wrong. Leverage is powerful. Controlling a $500,000 asset with just $100,000, that's a smart move. It gives you scale. It gives you access to bigger deals, bigger numbers, bigger potential. But that's only one side of the game. Here's the other side nobody talks about enough. While you're waiting 2, 3, maybe even 5 years for that property to appreciate, you're locked in. Your money is tied up. Your deal is fixed. Your outcome depends on one market, one asset, one location. And during that same time, the stock market is moving. Every single day, opportunities are appearing and disappearing. New companies are rising. Old companies are reinventing themselves. Entire industries are being built from scratch. And the people who are inside the market, they're not waiting. They're positioning. They're adjusting. They're catching momentum as it happens. Think about this. In real estate, you make money when you buy right and when you sell. But in stocks, you can make money in between. You can enter, exit, re-enter. You can scale up or pull back. You have flexibility. And flexibility is power. Now imagine this scenario. You put your $100,000 into one property. You wait 2 years, and you walk away with around $26,000 after costs. Solid, respectable. But at the same time, someone else took that same $100,000 and spread it across multiple opportunities. Growth stocks, tech, AI, companies like NVIDIA, and instead of waiting, they were compounding. Instead of being stuck, they were adapting. Instead of one outcome, they had multiple chances to win. Now let me bring you back to that story, because this is where everything clicks. Patrick talked about a man who said his greatest investment advisor for over 45 years was his grandmother, not a hedge fund, not a billionaire, not a Wall Street expert, his grandmother. And at 99 years old, she still had one rule: I only buy growth stocks. That's it. Simple, clear, focused. Now ask yourself, what does she understand that most people don't? She understands that growth never stops, innovation never stops, progress never stops. And if you position yourself in that flow, you don't just grow your money, you grow with the future. So step back and really look at the game. Real estate gives you leverage, but also limits your flexibility. Stocks give you flexibility and exposure to innovation. Real estate is one big bet. Stocks can be many smart bets. And this is where the real shift happens. The smartest investors in the world don't argue real estate versus stocks. They don't pick sides. They build systems. They diversify. They play offense and defense at the same time. They own assets that grow slowly and assets that can explode. Because at the end of the day, it's not about where you invest. It's about how you think. And the ones who win are the ones who understand the full picture. So here's the truth. There is no perfect investment, no guaranteed path, no one move that makes you rich. Because the game was never about choosing real estate or choosing stocks. It was always about understanding the game. Some people will waiting for the perfect deal, the perfect moment, the perfect opportunity, and they stay stuck. While others, they move, they learn, they adapt. They stay in the game, no matter what. Because in a world driven by innovation, where everything is changing faster than ever, the biggest risk is doing nothing. So whether it's real estate or stocks or anything else, just remember this. The winners are not the ones who wait. The winners are the ones who participate. And maybe, just maybe, the real question isn't which one is better, but are you even in the game? If this changed the way you see money, hit that like button, subscribe for more, and tell me in the comments, where are you investing first? Real estate or stocks?